exclusive analysis. In today's video, we're looking at the S&P 500, the semiconductors, and some individual tickers to summarize things. First things first, looking at the S&P 500 daily chart. Overall, it was another slightly positive session for SPY. It did get rejected just slightly below 600, but nevertheless, intraday price action, SPY had a pretty strong intraday price action day, testing the 601 level before it had a late day sell-off, closing back below that 600. So when we look at the daily chart of SPY, we have to have a little bit of caution up here. Not to say that I'm not bullish moving forward, but this type of a pattern is what's called a rising wedge pattern. Rising wedge patterns statistically have a little bit of a more of a higher probability of actually seeing some downside price action. So the question is SPY going to run out of a bit of steam here and likely push lower? Well, we have to look at the market as a whole. We have to look at some of the major weightings of some stocks that are very influential to the market. You look at something like Netflix, which has been a leader pushing this market higher. That's going through a bit of consolidation. You look at Microsoft. Microsoft has been such a phenomenal long ever since its earning gap up. That's running into some much longer term resistance. You look at names like Nvidia that just seem to be trying to break out on the daily chart and still being met with some sell side pressure. You look at SOXX, so the semiconductor ETF, which was remarkably strong today, breaking out of its daily chart, but also now running into a whole host of major resistance. Look at all of these major pivots that semiconductors are trading into. So this is a very big level that the market as a whole, and we all know semiconductors have a massive amount of involvement in this market, whether they trend higher or lower. And the question is, if semiconductors pull back here and retest 215, that likely means SPY could potentially retest the lower boundary wedge pattern around 594 or maybe slightly lower. Nevertheless, I still think dips are likely a strong opportunity to be bought, but we are in an inflection where you're seeing a lot of divergences across many individual stocks. There's a lot of mixed price action going on here. Some stocks are ripping, some stocks are getting clobbered. Some of my favorite names to keep on watch, obviously ticker XYZ with my members has been printing to the high side ever since we broke out of this initial bull flag inverse head and shoulders. AI is another one that had a little bit of a bearish reversal day closing negative, but I do think that this still can trend higher. Some healthcare stocks like Merck, I think Merck is breaking out of a bit of a basing formation over here. I still think SMCI is going to see a lot higher price action in the coming sessions. Today we had another breakout on Hershey. This is one that I went long with my members at 152.77. Today we also took a massive amount of profits on Hood. We had put options going in the money. We closed them around $69. We also closed some of our common shares short. But there's a lot of interesting and weird divergences happening in this market, and we just have to be mindful that obviously with the S&P 500 falling, it puts a lot of pressure on the market. Same thing, if it's rising, it forces stocks higher. So net, just be mindful that the stocks, the semiconductors, are into a very decent resistance level. You have names like Micron, which holds a very large size weighting into a ton of resistance here, often extraordinary rip and rally. Can these stocks go higher? Sure they can, but it's all based on probabilities. If we look at the Russell today, the IWM is looking like it's taking leadership and pushing to the high side. So now you're running into a scenario where the IWM is actually starting to see a little bit more buying pressure than, say, the S&P 500 and even the NASDAQ. The NASDAQ is slowly just grinding higher and higher, but as we approach these double top resistance, just be mindful that there can be a little bit of sellers that are finally break even. They could eventually start to exit and at least trim some positions. That's the prudent thing to do. Over the medium and long term, I still have some much higher upside targets on SPY. 625 is a massive level that I think that we're going to hit within the next 1 to 2 months, and then 660 by the end of the year. There's some key violations that would change my overall opinion, but for the time being, SPY is still just grinding slowly but surely into our upside price targets. On that note, please give this video a like down below. We'll see you on the charts.